for the market, which is enjoying, and actually yesterday had the best ever post-election session. Now, there should be no question that the worry of a blue wave was the main reason for selling last week. But now the question is, have investors moved from abject fear to unbridled optimism a little bit too fast? Moreover, with mega growth leading the way once again, what's the best way to be positioned for the next leg higher? And then again, how important would Jay Powell be? Because I think he needs to break out the pom-poms later on today. Let's bring in from the Fitzgerald Group, Principal Keith Fitzgerald, former Dallas Fed President and Chief Strategist for Quill Intelligence, Daniel DiMartino Booth, and Rosecliff Ventures founder Mike Murphy. Keith, let me start with you. Everyone's saying that a divided government is the best way. And of course, the long-term track record is good, although it doesn't always work out that way per se. But should investors be this excited from what we've seen in the last 48 hours? And from Bull Tick Capital Markets, their chief strategist, Kathryn Rooney Vera. Kathryn, you've been talking about this barbell approach, right? And I think part of it was to mitigate risk. But as this market begins to take off, is that still the way to go?
Well, this was a big sigh of relief for the markets. No big public option, no big Green New Deal, no big tax hikes on the corporations. So this is the PE ratio, realizing that earnings are important and are going to continue to be strong, rather than take a big cut in earnings due to an increase in the corporate tax rate. So division of power at least means that we do not get an aggressive anti-market policy becoming law. That
so
said,
I do think your portfolio more aggressive.
Yes, I do.
Do you make your portfolio more aggressive?
Yes, and fiscal stimulus is coming. It's not going to be 3 to 5 trillion. It's going to be 1.5. Monetary policy backing is going to continue. So I think that we need to be overweight equities, and we need to go offshore outside of the U.S. I think we're very close to maximizing value here, and I think we can find better returns offshore.
All right, if it's 1 point.
I think if the 10-year Treasury continues to move higher towards 1%, the Fed's going to start talking about yield curve control again. A steepening yield curve goes against everything that the Fed has worked in their mind so hard to achieve over the past decade. So I do expect that to be in the offing in the near term. I do still like the barbell strategy, though, Charles, and I will alert everyone that we are facing, another second bout of the virus, and I think the market's going to focus, yes, on earnings, but also on the possibility that a Biden administration will tout the idea of further lockdowns, not at a national level, but something worth thinking about and internalizing and keeping those defensive positions in our portfolio.
Here's the thing, though. Right now, the reopening trades are beating the COVID trades. GOL, the Brazilian airline, up 10%, UAL up 5%, Delta up 5%, Peloton's up 3%, Zoom's up about 1%. So the market doesn't agree with you. I don't think Biden has the mandate to do that. We're out of time. You guys are fantastic. Kathryn, Keith, Mike,